Hi, and welcome to the Stockscores Market Minutes for July 27th, 2015. This week I want to talk about why corrections are good. We are in a situation where we could soon get a correction. The market has been trending sideways for some time and is threatening that long-term upward trend line. Now, there is still no sign of a correction, but if one happens, we shouldn't despair because market corrections tend to recharge buyer interest. They cleanse the market of short-term sellers. The very best upward trends tend to start after significant market corrections. You see, when prices fall back, there is a compelling reason for buyers to push stocks higher again. Corrections are a positive as long as you do not hold through them. And so the key is to look for a break of the upward trend line as a cue for a correction. Now, in the very short term in the S&P 500 this past week, we hit resistance and broke the upward trend line. Again, very short term. This is a 1 month, 60-minute chart. And you can see there that that correction, that break of that upward trend line evolved into a sharp downward move, and that has probably set us up for a bounce back rally soon. We're getting a little oversold. You can see the trend to the downside is getting parabolic. Now, short term, that's a bearish sort of situation. We're still stuck in that sideways range on this chart, and we are also stuck in a sideways range on the longer term weekly chart. What's important to note is that the red line, which I've drawn at resistance, and the green line, which is the upward trend line, are converging toward one another, and eventually we will get a break one way or the other from the pointy end of this triangle pattern. Will it be up or down? Well, given that the trend is up, it's more likely to be up, but until we get a break either through that red line or down through the green line, we really don't know. If we get a break down through the green line, then you want to be defensive because that is a signal of a correction. You can see that has happened a little bit here on the Russell 2000 chart. It had broken out, but it is now pulled back and broken that little upward trend line that I've drawn, which really spans through the year. That price action this week, breaking that situation of rising bottoms. Not a real strong sign of a correction in the small caps because we still have lots of support over from 2014, but certainly a sign that the buyers tried to push this market higher and failed. On the TSX, we also tried to break the short-term downward cycle back in the middle of July. That has failed. We have fallen back into the downward sloping channel, and therefore we have to be bearish on the TSX in the short term. Longer term, we're still stuck in that sideways range that goes back to really last summer, late last summer, when oil prices started to collapse, and that has been a drag on the TSX because of the heavy weighting of energy in the TSX market. The move this week really is a continuation of that downward trend. As I said, it tried to break the downward trend the previous week, failed, and so we're probably going to move back down toward this green line of support at the lower boundary of that sideways range. Where we've really felt the selling pressure is in the TSX Venture. Because of the heavy weighting in mining and energy on the TSX Venture, we've seen a real sharp sell-off in the last few weeks through the month of July. No sign that that is going to end. However, it is pretty oversold. You can see prices have fallen down and away from the red downward trend line. We're very low on our Stockscores indicators. That's usually a sign that a bounce is due, but there's really no sign of one yet, so don't try to jump the gun on that. Treasuries have risen this past week. That means interest rates have fallen. Not too unexpected. I talk about the likelihood of that happening in the past few weeks because price had fallen down and away from that red downward trend line. We probably have another week or a few days of upward action on the price of bonds, which means interest rates go a little lower before they get stuck at that red downward trend line and likely roll over and retest the lows at the green line. Here's the US dollar index. It is trying to break its flag pattern. We talked about that last week. I drew the red line a little more conservatively this week just to show how the market is struggling with that cycle of falling tops on the US dollar. It'll be interesting to see what happens here. Do we break higher and really make a profound break of that downward trend line break, or do we retest the green line, which shows a slight rising bottom? Slight rising bottom is optimism. These falling tops is pessimism. So longer term, we have optimism because price is rising from the middle of 2014. But in the last little while, we've certainly seen some profit taking in the US dollar and hesitation of that bullishness move into the US dollar. That has certainly hurt things like gold and oil. You can see gold broke down significantly this week. Again, pretty oversold, probably due for a short-term bounce, but we're talking about a trader's bounce, a rally that really only short-term traders can take advantage of. If you are any kind of a medium or long-term investor, it is best to stay away from gold still, because there is a lot of work to be done before the buyers really take back control. Similar situation in oil, although not as bad, because it has not broken to new lows. You can see that we are just above the lows of the spring of 2015. I expect we'll bounce off of that this week, make a little bit of an oversold bounce back in oil, but again, longer term, still bearish. A little bit of a pickup in fear this week, not significant. You can see just a slight little jump there in the last few days, but you know, the market's a little bit complacent, and we could see that result in something a little bit uglier. Again, keeping an eye on that upward trend line on the S&P 500. So neutral on U.S. stocks, both long and short term. Canadian, I've lowered my short term rating down to bearish again. Neutral longer term. Bearish on gold, both short and long term, and the same for oil, bearish on both time frames. Once again, resistance has held, and the sellers have found some motivation to act in stocks. They remain stuck in their range while commodities suffer downward to lower prices. Gold and oil are likely to make an oversold bounce in the short term, and stocks should also find some support soon, but it's important to really take a trader's mentality to this market. You want to buy weakness and sell strength. Well, that has been the Stockscores Market Minutes for July 27th, 2015. Have a great week in the market and trade well.